Hello, everybody. My name is Bennett Tchaikovsky. Welcome to a managerial accounting video. This is a introduction. I've made a new question, so I'm just kind of sharing this with my audience. But before I say goodbye and thank you for liking and subscribing, this question is something that I created. This is my copyright. If you want to go through and use it, please reach out to me. So let's go over here and take a look at this. So we've got Los Santos. Wonder where I got that from. Thank you, GTA 5, as we anxiously await GTA 6. Produces custom-made automobiles for pre-teen drivers, collectively a unit. The following relates to the December 2025 production in units. All amounts are in thousands. So when we have a question like this and we kind of go through this, we're asked to do a few things. One is to determine the cost of goods manufactured for the month ended December 31st, 2025. Determine the cost of goods sold for the month ended 12/31/25. Prepare a multi-step income statement. Prepare the balance sheet presentation. So just a note, this is not job order costing. This is rather an introduction to managerial accounting. And this is just to kind of get us used to how things roll. So when I'm looking at my production, right, I'm kind of starting with my ingredients. My ingredients are raw materials inventory, or RMI. I have factory payroll. And then over here, I'm going to have factory overhead. Okay. So these are my ingredients, right? I have materials, I have labor, and then I have factory overhead. Now you'll hear these things like they'll say, oh, conversion costs, I don't care about that stuff, right? So basically when we hear prime cost, I believe that's referring to raw materials and factory payroll, or we're talking about a beverage. Conversion is really what the overhead and payroll are doing. They're taking these raw materials and they're making them into a finished product. So this comes over here and goes into our work in process, our work in progress, WIP, and then we have finished goods inventory. And then lastly, we get to our cost of goods sold. Now, a couple important things here, right? When we went through in financial accounting and we were doing something when we sold inventory on account, if I'm selling inventory on account and if I'm just a regular retailer, I would be debiting accounts receivable, crediting sales. I would then debit cost of goods sold and I would credit inventory. If you don't remember this, leave a comment below and I'll tell you where to find it. So the very ending part of this over here is the last step. But remember, we're now a manufacturer. So we're making the product ourselves. So therefore, for a manufacturer, this process is different. We're dealing with the things beforehand. So as we look at this here, kind of some new terminology, this part over here, what we send from work in process to cost of goods sold to finished goods inventory, this is going to be our COGM, or the cost of goods manufactured. So what did we send from work in process to finished goods? And then this over here is going to be our cost of goods sold. Always fun and exciting. So the big thing with these questions is we want to make sure that we're doing the setup properly. And we're going to be using T accounts, which is all the more fun. I'm Professor T. My last name starts with a T, not a timeout. But we're going to go over here and set up our questions. So raw materials inventory, right? So I'm asked for all these different things, determines cost of goods manufactured, cost of goods sold, and then we're going to prepare a multi-step income statement, and then the balance sheet presentation for inventory. So what I'm going to do right now is set up my T accounts. So over here for raw materials, right? And if you're taking my class, when you get to the exam, these account names will not be here. That's going to be something that you're going to need to go through and put in. So right over here, my beginning raw materials is going to be 300. And my ending is going to be 500. My work in process inventory, my opening balance is going to be 800. My ending balance right over here is going to be 400. Okay. For my finished goods inventory, my opening balance will be on 12/1/25 will be 1,000, and my ending balance right over here is going to be 500. Okay. So the first thing I want to do is I want to write out the T accounts, right? The raw materials, payroll, factory overhead, meaning what's going into our production. This is going to then go to work in process when we kind of put these things together. It's then going to go to finished goods inventory, or what we call our cost of goods manufactured. And then it's going to finally go to cost of goods sold. Okay. So let's look at the next one over here. We're going to just set up the T accounts. Raw material purchases for the month of December. So if I'm buying purchases, remember, we're going through and we're dealing with T accounts, right? So right over here, when we have a T account, why do I like T accounts? Assets equals liabilities plus owner's equity, right? DCER. When I have an asset, which is inventory, I increase the asset with a debit. I decrease it with a credit. Liabilities and equity accounts typically have credit balances. They're increased with credits, decreased with debits. Over here, emergency room, expenses, revenues. I record expenses with debits, revenues with credits. So that's why we use T accounts. So if I'm purchasing raw materials, this is going to go through over here and increase this account by 750. For factory payroll, right? These are our workers right over here. Our factory payroll is going to be at 900. Now, one of the things I did not do right over here, but I am going to do right now, is I left a little bit of a blank. I've got indirect labor. And if you're taking my class, I am not going to go through and give you this balance, right? This is going to be something that you're going to have to go through and figure out on your own, but I'm going to show you how we're going to do that very quickly. So direct labor was 825. What does that mean? Well, in our work in process, we've got a couple of different things happening, right? Work in process, we got our beginning balance, right? When we send materials out of raw materials inventory, we call this demon master or direct materials, right? So this is going to come over here, direct materials. And similarly, with factory payroll, we have DL. This is direct labor. And in our case right over here, when we have our direct labor, we know that this balance is going to be 825. Okay. So this is going to be 825 right over here. Okay. So let's just keep on going through and looking at this. We don't know our indirect labor. We'll solve this momentarily. Okay. So coming over here to our factory overhead, we've got direct labor, direct materials, and everything else. If it has the word factory in it, we're going to put it into factory overhead because it relates to supporting that production process. So here we've got factory utilities, right? This has the word factory in it. We've got factory insurance right over here. This is at 52. Now, if you're taking my class, do you have to go through and write this out on an exam? The answer is no. However, I do this here on these videos so you see where every number is coming from. Over here, I've got factory insurance expense. It's going to be factory depreciation. This over here is going to be 41. And I've got factory supplies that were used, and this is going to be 12. Sales. doesn't go in here. That's going to be on the income statement. Marketing and advertising, does that have the word factory? No, it's going to be on the income statement. Sales salaries, does that go into production? No, it's part of our period costs. It's going to be how we're going through and selling. Similar over here, sales commissions. This is going to be a period expense, meaning part of sales, selling, general, and administrative. Freight out expense, meaning the cost of shipping the goods to the customers. That does not go into our factory costs, right? If we were shipping inventory or raw materials to us, it would go into over here. But for our purposes here, freight out, that's a selling expense. Office salaries, corporate insurance expense, right? They don't have the word factory. So we're not going to put them into our factory overhead. Very, very important to remember. Okay. So we're asked to determine the cost of goods manufactured. So now what we need to do is to have these items go through their journey. The first thing I'm going to look at over here is we'll start with the top T account. Does 300 plus 750 or 1,050 equal 500? No. To make this balance, I'm going to need a credit of 550. 300 plus 750 minus 550 equals 500. This is the math we do in accounting, managerial accounting. It's exciting. So this 550 is going to travel to our work in process. Okay. Notice over here, it's okay if I have an ending balance of raw materials because those physically exist, right? Raw material, work in process, this is fine. Finished goods, we can, because it physically exists. However, factory payroll and factory overhead have to have a zero balance. So coming over here, does 900 minus 825 equal 0? No. The difference here and why I put the question marks over here, this is going to what we call IL or injured list. No, means indirect labor or IL. Now with indirect labor, this is going to travel over here to our factory overhead. It does not go directly into WIP. It's part of factory overhead. Now, you might be saying to me, Tchaikovsky, we only have one work in process account. Why is this happening like this? Because when we get to job order costing and we have multiple work in process accounts, the indirect labor is going to go to factory overhead. And by then it's going to make a little bit more sense. So over here, I've got factory overhead. I've got indirect labor. And now I've got 900 and I've got 900. And this has a zero balance. So I'm good to go. With factory overhead, similar to factory payroll, this has to have a zero balance, right? Because it doesn't really, where it's accumulating costs here. So if I look over here, my actual overhead costs were 269. To make this account go to zero, I need a credit of 269, right? So over here, that's what's happening with that factory payroll, the direct labor. We went through, and I'm going to go ahead and do this color over here. And now, where does this factory overhead of 269 travel to? This is the third component of what's going to be going into our work in process, or FOH, factory overhead, right? So this over here is where this 269 is going to be going through and coming from. So we'll do a little Barney color right here. Always fun. Perfect. So our factory overhead is zero. Our factory payroll is zero. And this T account right over here balances, right? So direct labor comes in a work in process. What goes into WIP? Beginning balance, direct materials, direct labor, and then factory overhead. Now, does this T account balance? Does 800 plus 550 plus 825 plus 269 equal 400? No, it does not. I need to go through over here and subtract 2,044. If I subtract 2,044, I get to my ending balance. What we send out of work in process to finished goods inventory is called our cost of goods manufactured, right? So that's exactly what this is. I'm going to pause really quickly one moment to share with you something why I like using T accounts for this. The reason why I use T accounts, and this is a solution manual for a publisher, the way they go through and show it here, like for the cost of goods manufactured, this to me, we're getting to the same result, but this to me is way more confusing. It's a bunch more stuff to go through and memorize, right? And I'm getting to be older, so I don't like to memorize this kind of stuff, right? I want to go through and use the T accounts, right? I want to go through and use T accounts because it's going to go through and get me the same result, right? And it's easier to go through and to visualize it, much more easier to go through and to do that. If you're at a job and they say, well, prepare a cost of goods manufactured statement, you can go through and prepare it there. But I've never been asked to prepare one. So there you go. Okay. So the first answer we got over here, what we sent out of WIP to finished goods, this is our cost of goods manufactured. So coming over here, right, the first answer to our question is, what is our cost of goods manufactured? This is going to be 2044, right? That's what this is right over here. Now, to go through and determine our cost of goods sold, well, does 1,000 plus 2044 equal 500? The answer is no. I'm going to need a credit for 2544. If I subtract 2544, I get 500, or my ending balance, and this is going to basically be what goes to cost of goods sold. Okay. So that last part over here in terms of a journal entry, so when we're a manufacturer, we got to go on a little bit of a journey, right? So this is going to be the journey that we're going to be going through and taking. Okay. So my cost of goods sold is going to be 2544. So let's put that in right over here. Okay. Now, it's asking us to prepare a multi-step income statement. What does that mean? A multi-step income statement, and I just happen to have the Home Depot balance, is for basically someone who is either selling retail or even a manufacturer. It is basically showing what is our gross profit, what is our operating expenses, earnings before income taxes. So this is going to be a little bit more simple, but if you're taking my class, this is something that you should have learned in Accounting 1A. If you didn't learn it, you're going to learn it right now. It's going to be great and exciting. When I prepare a multi-step income statement, the first thing I need to do is to give myself a header. Los Santos Inc., right? So there you go. Income statement for the month ended 12/31/25. When I do my income statement, I'm going to start over here with my sales. My sales, it was told to me, are right over here at 5,000, right? So that's my first part. Less cost of goods sold. What was my cost of goods sold? Well, my cost of goods sold, I figured it out, was going to be 2544. This is going to give me my gross profit. My gross profit right over here is going to be 2456. The next thing I need to do, and you'll see different companies do things different ways. Sometimes I might say, well, breakout selling, general administrative is separate selling. May have done that on another question, but for this one over here, it's not asking us for that. So I'm going to say less selling, general, and administrative expenses. Okay, so come over here. My first SG&A is marketing and advertising. So my marketing and advertising expense, I'm going to give us a little bit more room. This over here was at 420. Now I'm doing this kind of crazy indentation just because when I'm going through and adding these up, whenever I do this, it's usually a way to kind of show you like that I'm adding up different numbers. So I've got marketing and advertising. I then have sales salaries expense. Over here, my sales salaries is at 155. My sales commissions, this tells me over here is 5% of sales. So my sales commissions are going to be 5,000, which is the amount of my sales, times 5%. Next, beyond sales commissions, I have then freight out. My freight out expense is at 19. My next one over here is going to be my office salaries expense. My office salaries expense is at 29. And then my corporate insurance expense is going to be at 18. This is my product cost, or what is my cost of goods sold, right? This is basically what my product that I sold. These here are what I call my period costs, right? These are automatically expensed during the period. So over here, my total SG&A is going to be the sum of 891. Okay. So my net income before, actually, this would really be operating income, but we don't have any interest expense or other revenue. So my net income before income taxes is going to be 2456 minus the 891 or 1565. So my income taxes is going to be 1565 times 25%. So my net income after tax, or just net income, you can call it either, is going to be 1565 minus here. And I'm going to get a 1173.75. So if you're taking my class, always round to 2 decimal places. So there we go. So this is a multi-step income statement. Is it perfect? The answer is no, right? This is probably the better way to do it with the double underlines and all that other kind of fun stuff. But I'm going to let you worry about that once you're starting to work full time at an accounting firm or for a business. So last thing we need to do, prepare the balance sheet presentation for inventory. Now, for this one over here, when we're going through and looking at inventory, this is actually a relatively, I'm going to call it simple, but a relatively straightforward thing to do. We have over here LSI, balance sheet. I'm going to call this partial. As of 12/31/25. Remember, the balance sheet is a snapshot in time, right? It's basically you're taking a photo, and this is what our balances were. So I'm going to have assets, and then I'm going to have current assets, right? Because inventory is a current asset. Inventory for a manufacturer is going to be made up of 3 parts: raw materials inventory, work in process inventory, and then finished goods inventory. So coming right over here. So my raw materials ending balance, and I really don't have to do any kind of computation. This is going to be 500. My ending work in process is 400. And my ending finished goods inventory, or FGI, is going to be 500. So my total inventory is going to be the sum of these 3 different values. Now, I didn't give you any more information to go through and to do a full balance sheet, but this is when I'm asking you to prepare the balance sheet presentation of inventory. This is a certain way to go through and to do it. Remember, inventory is a current asset. It's an asset that we're going to be using in the coming year, right? When we have our assets, we classify these as current and non-current. That's what we're going to be going through and doing. So this is an additional question that I went through and created for my managerial accounting class. Hopefully you found this helpful and useful. The more questions of these you do, the better off you're going to be. Remember, if you're trying to learn job order costing, this is a great question to learn first before you get to job order costing, just because it's going to get you used to going through and using those T accounts. So thank you very much for being with me here today. Appreciate your patronage. And if you have other videos you'd like me to go through and create, feel free to leave a comment below. And I look forward to seeing you on future videos. Have a great day.